Welcome everyone to this week's edition of The Week in Real Estate. And guess what? Well, no surprises here. The RBA, well, they reduced the official cash rate by a further 0.25%. Another 25 basis points down to a new low, 0.5, 0.5%. So the major banks, well, they moved swiftly, and believe it or not, yes, they did in fact pass on the full rate cut. Well, I'd have to say the move will be welcomed by the property market, and certainly, well, I reckon it's going to give us some further impetus as, well, let's face it, share markets, they're copying an absolute hammering at the moment with the impact of coronavirus. In fact, I actually ran into a colleague of mine who's a surgeon just today, and he said he was going up to Sydney for a urology conference, and people were flying in from all over the world, and, well, it was cancelled. Anyway, RBA Governor Philip Lowe, well, he says it's too early to tell how persistent the effects of the coronavirus are going to be, and at what point the global economy, well, will it return to an improving path. But what we are seeing is policy measures being announced in several countries, including China. So that's certainly going to help support growth. Now, Philip Lowe, he also said that as inflation remains low, almost everywhere, and unemployment rates are at multi-decade lows, in many countries what we're going to see is further monetary stimulus in the coming months in many countries, including, you guessed it, the US of A. Now, already in Australia we've seen travel and the education sector absolutely smashed. You'd have to say, if you've been living under a rock, well, well, all I can say is go to a supermarket, because the panic buying on toilet paper, rice, pasta, hand sanitizer, tissues, incredible seeing those empty shelves. Now, it's been confirmed we are definitely on the up. CoreLogic, well, they reported that 6 capital cities now recorded annual growth, with the combined capital city increase measuring 7.3%. for the last 12 months. Now, Sydney and Melbourne, they lead the way, both recording an annual 11% increase. Sydney's median price is now a staggering $875,000, while Melbourne's sits at $690,000. Now, the former strugglers, Perth and Darwin, well, they are showing some upward trajectory, supporting certainly I'd say a wider recovery. Now, Brisbane prices have increased 2% in the last quarter, and one would say that they remain affordable, with a median price sitting at $505,000, while Hobart, well, starting to nip at their heels up in Brizzy. They've got a median price down as our southerly neighbours at $490,000. So overall, house values in Melbourne, Brisbane, Canberra and Adelaide, well, they're tracking at record highs, while there's evidence that the downturn across the Nullarbor is over in Perth. Now, from a tech perspective, and I don't really talk much about tech, but FinTech says neobanks, yes, you heard me correctly, that's neobanks, or digital banks, are set to become the way of banking. Because what they do, they operate entirely, you guessed it, online. So they don't have the big heavy costs associated with running bank premises and paying staff. They are much more cost effective and can run leaner. And as such, well, they can offer better interest rates. Now, in terms of safeguards and how these banks will operate, the Office for the Information Commissioner has released privacy safeguards, and that's basically as to how these new players and established banks must obtain consent from customers before acquiring and sharing their data, which will include a customer's financial position. Now, the co-founder of FinTech and chief exec of Athena Home Loans, and we're starting to see them advertising a bit, that's Nathan Walsh, says that while open banking won't apply to mortgage products until the end of the year, he sees home loans as the main game for the regime, because sharing of data will help customers access better deals and of course enable them to refinance. He reckons that inertia is a $10 billion disease in the mortgage market. Now, finally, most of us do love our gadgets. I certainly love my toys, but be aware that your personal spending on your iPhone, the latest iPhone, or Uber Eats and Netflix, can have a detrimental effect on your home loan application. Now, my CRA Lawyers Chief Executive, Graham Dosal, says that banks scrutinise every detail of a buyer's spending these days when assessing your home loan application. And even a credit inquiry from 4 years ago, well, that could be a red flag. So, when you apply for that new phone, the telco will do a credit check, which will show up on your credit file. Now, a few of these hits in a short period on your credit file, well, you can run the risk of being rejected outright for a home loan, according to Dosal. Now, some lenders now treat buy now, pay later services just like payday lenders, which means an automatic decline. And we all know telcos are renowned for defaulting people on a credit file. Now, whilst a default may not necessarily rule you out of getting a home loan, your bank may see you as a risk and apply, unfortunately, a higher interest rate, which may price you out of the market. Finally, I want to say congratulations. It's International Women's Day today, being Sunday. And as an Aussie, well, good luck to the Australian T20 women's team against India tonight at the MCG. Hope the girls can do us proud. Either way, great effort and go Aussie. Have yourselves a fantastic week, folks. Philip Robison from Philip Robison saying bye for now.